If you receive Social Security, SSI, SSDI, or VA benefits, you need to pay very close attention to this right now because what I'm about to share could literally determine whether you get your money early or late, whether you lose part of your check to fees every single month, or whether more of your benefit actually stays in your pocket where it belongs. And no, this isn't some hype or theory. This is something beneficiaries all across the country are already experiencing right now in 2026. And a lot of people still don't even realize it's happening. Because here's the truth that nobody at Social Security is going to call you up and tell you directly. Not all banks treat Social Security money the same way. Some banks release your payment earlier. Some banks hold it longer. Some quietly charge fees that slowly eat away at your benefit month after month. And some banks, frankly, make it harder than it needs to be for seniors and people with disabilities to access their own money. And that's exactly why today's alert matters. Because right now, with prices still high, with COLAs barely keeping up, with Medicare premiums taking bigger bites than ever, the last thing any beneficiary needs is a bank slowing things down or skimming off fees behind the scenes. And yet, that's exactly what's happening to millions of people who don't even know they have better options available to them. Let me explain what's really going on here. Because this is one of those topics that doesn't get enough attention, but once you see it, you can't unsee it. Social Security sends payments electronically. Once that payment is sent, it goes through the ACH system. Now, here's where the difference starts. Some banks wait until the official payment date to release your money. Others release it as soon as they receive the funds from the Treasury, which can be 1, 2, sometimes even 3 days earlier. Same payment, same government money, totally different experience depending on who your bank is. And here's the part that really frustrates people once they learn this. The delay has nothing to do with Social Security itself. SSA isn't holding your money. The Treasury isn't holding your money. The difference comes down to your bank's internal policies. In other words, your bank decides whether to release your benefit immediately or sit on it until the last possible moment. And while they're sitting on it, you're waiting. You're checking your account. You're wondering if something went wrong. You're worrying about rent, groceries, utilities, prescriptions, all while your money is already there, just not available to you yet. Now add fees on top of that, and this becomes an even bigger problem. Monthly maintenance fees, overdraft fees, ATM fees, paper statement fees, inactivity fees. Some people are losing $20, $30, even $50 a month without realizing it, simply because their bank structure isn't designed with Social Security beneficiaries in mind. And when you're on a fixed income, that money matters. That's food, that's gas, that's copays, that's peace of mind. So let's talk about what we're seeing in 2026 because patterns are becoming very clear. Banks and financial institutions that focus on direct deposit customers, especially benefit recipients, are the ones that tend to release payments faster and charge fewer fees. These institutions know that Social Security payments are reliable. They know the money is coming. So instead of holding it, they make it available as soon as it hits their system. That's why so many beneficiaries are reporting that they're getting paid earlier than their neighbors, earlier than their family members, earlier than people using traditional big-name banks. And once you hear that, it changes the way you look at things. Because suddenly you realize that waiting until the 3rd or 4th Wednesday of the month isn't always necessary. For some people, that money is showing up days earlier. And when you're living check to check, days matter. Another issue that keeps coming up is overdrafts tied to timing. Let's say your bank releases your Social Security payment late in the day or exactly on the official date. Meanwhile, your rent or utilities are scheduled to pull early that same morning. Boom. Overdraft. $35 gone, and then maybe another one hits, and then another. All because your bank's timing didn't line up with your bills. That's not a budgeting failure, that's a system issue. Now, compare that to banks that release payments early. When your benefit hits sooner, you have more control. You can pay bills ahead of time. You can move money around. You can avoid overdrafts altogether. And those banks often don't even charge overdraft fees the same way, if at all. Some don't allow overdrafts on benefit accounts. Others cap fees. Others eliminate them entirely. This is why so many beneficiaries who switch banks say the same thing. I didn't realize how much money I was losing until I stopped losing it. And let's be clear here. This isn't about telling everyone to rush out and do the same thing tomorrow. This is about awareness. Because awareness is power. When you know that faster access and lower fees exist, you stop accepting delays and charges as just the way it is. You start asking better questions. You start comparing. And suddenly the leverage shifts back to you. Now, another thing people don't talk about enough is customer service. When something goes wrong with your Social Security deposit, you don't want to be stuck on hold for an hour talking to someone who doesn't understand benefit payments. You don't want to hear, just wait a few more days. Banks that work closely with benefit recipients tend to have systems and staff trained specifically for these situations. They know the deposit schedules. They know the codes. They know what's normal and what's not. And that alone can reduce stress significantly. And stress matters, because financial stress is already through the roof for beneficiaries right now. We've all seen it. Rising costs, modest COLAs, promised relief that hasn't materialized. People are tired. They're frustrated. They're watching every dollar. And when your bank becomes part of the problem instead of part of the solution, that's when people start to feel trapped. Here's something else to think about. Banks make money by holding money, even for a short time. Multiply that by millions of accounts, and it adds up fast. We're talking about interest, internal liquidity, overnight balances, all of it. So when a bank delays releasing your benefit by even a single day, that's not an accident, and it's not a technical issue. They already have the funds. The money is already there. They're simply choosing when to let you touch it. And they're not doing that for your benefit. They're doing it for theirs. And once you see it that way, once you understand that this is a business decision and not a system delay, the whole thing feels very different. It stops feeling like, that's just how it works, and starts feeling like, wait a second, why am I accepting this? Because at the end of the day, that money is yours. It's not extra money. It's not a bonus. It's your monthly benefit that you've earned and that you rely on. And when access to that money is delayed, even briefly, it creates real consequences. Bills don't wait. Rent doesn't wait. Prescriptions don't wait. Life doesn't pause just because your bank decided to sit on your deposit for a few extra hours or days. Meanwhile, banks that release payments early aren't doing it out of kindness either. Let's be honest about that. They're competing for customers. They understand the value of trust. They know beneficiaries talk to each other. They know word spreads fast in the Social Security and retirement community. They know that once someone finds a bank that pays earlier and charges less, they tell their friends, their family, their neighbors. And those conversations matter more than any commercial or advertisement ever could. So these banks design their systems differently. They build them to be faster. They build them to be simpler. They build them to be cheaper. Not because they're charities, but because they understand that long-term relationships are more valuable than short-term holds. They understand that if you treat people fairly, especially people on fixed incomes, they stay. And that's something traditional banks have been very slow to catch up on. Now let's talk about switching, because this is where a lot of people freeze up. This is the part that scares people, and honestly, that fear makes sense. Nobody wants to mess with their Social Security deposit. This isn't just any paycheck. This is the check. This is the one that everything else depends on. So the idea of changing anything connected to it feels risky. It feels like one wrong move could cause delays, problems, or missed payments. But here's the reality. Updating your direct deposit with Social Security is something beneficiaries do every single day. Not once in a while. Every single day. People move, banks close, accounts change, life happens, and Social Security has systems in place for this exact reason. It can be done online, it can be done by phone, and once it's processed, your payment simply follows your instructions. That's it. There's no drama. There's no interruption when it's done correctly. No lost checks, no missed months, no mystery payments floating around. What actually causes problems is not switching. What causes problems is staying with a bank that's draining you slowly month after month simply because it feels familiar. Familiar feels safe, but familiar doesn't always mean better. Especially in 2026, when banking technology has moved forward significantly, but not all institutions have moved with it. Some banks are still operating on outdated systems, outdated policies, and outdated assumptions about what customers should tolerate. Another thing beneficiaries are noticing more and more is transparency. And this is a big one. Some banks make it very clear when your deposit is pending, when it has arrived, when it will be available, and why. You can see it. You can track it. You're not left guessing. Other banks don't show anything until the last possible second. No pending notice. No explanation. No reassurance. Just silence. And that lack of transparency fuels anxiety in a way that's hard to explain unless you've lived it. When you're relying on one payment a month, uncertainty is brutal. Every hour feels longer. Every delay feels personal. And the stress of not knowing can be just as damaging as an actual financial shortfall. Transparency isn't a luxury for beneficiaries. It's peace of mind. And then there are ATM access issues, which don't get talked about nearly enough. Some banks charge for withdrawals. Some limit the number of free ATMs you can use. Some tack on fees that don't show up until after the fact. Others refund ATM fees entirely, even if you use an out-of-network machine. Over the course of a year, that difference can easily add up to hundreds of dollars. Hundreds of dollars that came out of your benefit for no good reason. Again, money that should be staying with you, not disappearing quietly through small fees that feel insignificant one at a time, but add up fast. So when people ask, does my bank really matter that much? The answer is absolutely yes. More than most people realize. Your bank controls timing. Your bank controls fees. Your bank controls access. Social Security sends the money, but your bank decides how smooth or stressful the experience is going to be every single month. Your bank decides whether the process feels supportive or hostile. And once you understand that, you realize this isn't a small decision. It's a quality of life decision. And here's the thing. Lawmakers talk a lot about helping beneficiaries. Banks don't. They just quietly design policies that either help or hurt. And because there's no big announcement, most people never notice until someone points it out. That's why this alert matters. Because once you know that faster paying, lower fee options exist, you're no longer stuck thinking this is the best you can do. You realize you have choices. And choice is leverage. Now I want to hear from you. Are you getting your Social Security early? Are you paying bank fees every month? Have you switched and noticed a difference? Drop your experience down in the comments. Your comment could literally help someone else make a better decision. And if you're thinking about looking into this further, take your time. Compare. Ask questions. Read the fine print. Look specifically for early direct deposit, low or no monthly fees, minimal overdraft policies, and good customer service for benefit accounts. Those are the key things beneficiaries are saying make the biggest difference. Because in a time when every dollar matters, keeping more of your money and getting it sooner isn't a luxury. It's survival. As always, I'll keep watching what's happening, listening to what beneficiaries are reporting, and bringing this information directly to you without the fluff. If this helped you even a little bit, please hit the subscribe button, share this video with someone who might need it, and stay tuned. There's a lot more coming. And 2026 is already shaping up to be another wild year. Until next time, take care of yourself, protect your benefits, and I'll see you again very soon in the next update.